Hello again. Today is Tuesday, February 26th, and I thought it'd be a good idea to show what yesterday's market looked like. I traded it, even though it was lower volatility, it worked out well for me using 2-point targets because it mainly, the rules that I use applied to it, even though it was lower volatility. So it's the same ratio of patterns that work well in high volatility markets will also work well in lower volatility markets as well for the trading model. And so that's a good test to see if your system works in every type of market. So if it works in high volatility and low volatility, then you know you've got a pretty good trading system. As always, I'll set the target order before I start the market here using Market Replay. That's a great program, by the way. I recommend any trader who has access to this software use this program to practice because it allows you to stop and start, really analyze the market. I still use it today, even though I get enough trading during the day. I'll still go over the markets using this software. And it's really, really helpful to just analyze what I did right or did wrong. And I still see subtle things that I could do differently. So it's really good and useful tool for that. So I've set the sell limit orders on the buy bracket and the sell bracket. I've got the sell limit orders, which are the targets, set to 2 points for this low volatility market. As usual, and some may disagree with how far I've set the stop loss, I'll set it to 5 points just because that gives me room if the trade comes against me. Sometimes I might want to reverse it, and that'll give me time to change direction of the trade before that stop loss is hit. If you're more comfortable using a lower stop loss order or a lower number of points, you could do that too. But that's where I'm kind of comfortable in that zone right there. Since I didn't know what how the market would open up, if it would be volatile, if we return to its normal volatility or not. I'm still going to assume that it's in a low volatility season, so I'm going to use 2-point targets. All right, let me start the market here. As usual, you don't want to you want to wait for that first fractal to form or the first crossover to form, because you don't want to be trading the formations that occurred prior to the opening of the U.S. market, because these formations were obeying a different set of rules before everybody in the U.S. market gets involved. As you can see, the volume, this isn't really a spectacular opening. Sometimes you'll get the volume jumping to like over 20,000. But you can see it really increasing compared to what it was in the overnight markets as the U.S. market opens here. I'm looking down here on the 5-minute chart at the bottom. I could place the volume on the 1-minute chart, but I figure it takes up too much space and it's not really that helpful. And I have kept the stochastic indicator off the 1-minute chart because I haven't really found this tool to be useful in the 1 minute. But for illustration purposes, I'll just keep it here for if you enjoy this indicator, if you find some use for it. So already, as this day was starting on Monday, I could tell it was fairly low volatility already, because it's just normally on the opening you'll have it launch one direction or another, and you can see all the hesitation here. That shows me that yeah, it's really not going to be too volatile day just from the look of the start of it. See, right here, it would be a mistake to try to guess. Normally, if that 80 MA line is down below the 14 moving average, you would say, well, the market's moving down. Or in this case, since it looks like it's crossing over, but we really don't have enough data yet to make that determination. I want to see a good hook formation, 1, 2, 3 formation, one side or the other before I commit to a trade. So because I've already gone over this chart, I know what it did, but I'm just going to purely go by the rules that I have, how I would normally trade it if it was a blind trade. So that it's really no difference from the way I actually traded in reality to what I'm doing now, because I'm using the same criteria. What I'd be looking for at this point is like I said, I want it to show a hook and then or show a 1, 2, 3 pattern or a crossover, and for that crossover to hold, I want it to come above this, and then the opening of the next bar would have to come down and then move back upward, show momentum upward for me to be long here. Even though that's at the top of that Bollinger Band there. So let's let it come down a little bit. Okay. Even though the trade entry was at the top of the Bollinger Band, that's right after the crossover occurred, so that's usually a good bet at the beginning of a new trend. You can see that the momentum's upward, and this is on the upward side of that cycle, that sine wave cycle. So that's a good bet that that's going to be a long trade, even though I shouldn't enter near the upper Bollinger Band or the lower Bollinger Band. The ideal entry point would be close to that 80 MA line, but you can kind of get away with that at the beginning of a trend because you've got the momentum there. And for the next trade, I do want to see it come back below this these rising lows. I want to see it break below that low, and then enter it near the Bollinger Band. So for the sake of time, I'll just speed it up a little bit. Okay. So as you can see, it broke below it's made a number 2 point because that's a lower high, and this is a lower high, and this is really a lower high. So we're looking for the number 3 point, and has to be a point that's lower than this previous low, and we want it to be around the Bollinger Band. But at this point, I would be thinking, okay, I don't want the Bollinger Band curving downward when I enter the trade. I want it to be actually, by the time I enter it, I want it to be moving back upward. So that tells me I can't go long there because I don't know if that's reversing. Some days it does that, or it's just traders are trying to get used to what the market's doing, so they may take it in crazy directions, and they're not following any set pattern yet, and they might decide to take that way down here. So I have to wait for that to stop and then reverse and come back up and wait for that ADME line to be sloping upward before going long again. So let's continue with that at the normal speed here. Got my mouse on the buy button, and I'm looking at the timer here. We've got 20 seconds left till the minute. Normally you'd be looking at the countdown timer up here in the live market. So I can see this is pulling back not quite 50% of the move up. See, this would be the move up, and it's pulling back less than 50%. As that comes back up, having momentum, I'm going to want to be long there. See, as it pulls that 80 EMA bar up again, that shows me it has momentum coming upward. That may be have been a little bit early to enter that, but yeah, that's the view right there that I want to see. It pulled that 80 EMA line back into that upslope. So normally you're looking for a target of the next swing, which would be like from here to here. It would be that distance from the number 3 point. So we're looking for a target up here. So I think I can get another trade at it. Normally you want one trade per swing, but why not try that again since my targets are so low at 2 points. Can try it again. You couldn't get away with that with 5-point targets. And the brokers love you because you're paying commissions each time you trade there. So let's speed that up to the next entry. I know it's tempting when it's on the when it's moving back in the pullback area. It's tempting to want to jump the gun and say, well, it's at my when that hits the 80 EMA line. It's tempting to just be a buyer there, but you don't want to be the buyer when it's heading in the opposite direction to your long position there. And that would be tempting too. See how that looks like a number 3 point, but I want to see it. You got to kind of be a stickler for having it hit your ADMA line before it moves up, because it'll trick you into believing that's a number 3 point or that's a number 3 point. And so I want to see that number 3 point, and then I want to see it open or make a higher low first than this low to confirm this as a number 3 point, or wherever that number 3 point is made. In other words, I want to see upward movement first before I enter the trade, so I'm not entering the opposite direction. Odds are, if you enter even at the wrong timing, if you're entering it right at the ADMA line, you're going to be in good shape. But see right there, that would have been a good entry. depending on where the next open is here, normally I would enter it there, but depending on where the next open is, I think that's a good signal. We've hit that 80 MA line. The line is still sloping upwards, and if I get movement above this opening right here on the next bar, if it comes back up through that, I want to be long, because that, to me, that's confirmation enough that it hit that 25% area here. So here we go. Whoops. Wow. Usually you don't get the software doing you a favor like that. That got me in lower than where I entered. The nice thing about 2-point targets, if you're trading a market that's much more volatile than your target, is that they, even when you're wrong, you can get those hit before the 5-point stop loss. That's why I want to give a lot of leeway. Each one of these bars, for example, that's let's say a 6-point bar or something like that. Whoop. Now that was probably a mistake. I was talking, I didn't, I was trying to get it right there, because you're breaking out of resistance right there. Let's see. I'll just get out at some profit. See, right here in the pullback area, we're right at that 50% level, and this up move is roughly equal to the previous up move, and you want to see that symmetry. But right here we're getting a smaller up move. We had after a large pullback, and we're getting rounding of the upper Bollinger Band. So that tells me be cautious on the next trades here, because it's just, you can see it losing momentum. So if you get a large pullback, let's say if it actually pulled back to the previous pivot point, previous P3, you start getting pullbacks that are what I would consider large, and then you get small up moves in the trend, in this case an uptrend. That's a sign of decreasing momentum towards the upside. So I'm suspecting maybe the next up move will be a 1-2-3 top formation here. See how far that this was the previous up move, and this is extremely short, and look how far the pullback is compared to this up move here. This is pulling right almost back below that P3 point. That is right there, it's trying to reverse. But you never want to just automatically assume it, because a lot of times it can fake you out, But that's a pretty good indication right there. You're breaking through support right there. And so what I want to see at this point, in higher volatility, I might risk an up trade, to trade that from the number 2 point to the number 3 point. I might risk an up trade there, but obviously that's pretty much crossed over at that point. I want to see it right at that 80 MA before I take a short trade. So it's come down, and I want to see a little bit of a pullback. So it makes a number 3 point here, and then I want to see a trade back through it in order to take the trade to the downside. But we haven't formed it yet, so the other rule is I can take the first open after the crossover, even if I haven't made the 1, 2, 3 top yet, or 1, 2, 3 bottom, in the case if I was trading to the upside. See, I like that up thrust right there, and it's met my requirements. It's come back a little bit. Sometimes it doesn't come back a whole lot. See, I should have waited. I should have waited for that movement right there. Move my stop loss away. I've seen it sometimes get this far down, looking like a full reversal, only to resume. But what I'm also looking at on the 5-minute chart, see where I've got my short area right below the low of this previous bar? So it's broken through that support over here. That's a pretty good indication it's going to come back to that 80 MA line on the 5-minute chart, which will definitely hit the target on the 1-minute chart. So now the process of looking for the P3 point starts all over, trading the hooks to the downside here. So let's just speed that up until I find one. Just since it's so close to that 80 MA line, that's tempting to do that. You know, I'm probably going to get the number 3 point there. Yep. See how it came down? That's the number 2, number 3. Sometimes you'll get the 1, 2, 3 before the crossover. Sometimes you get it during the crossover, and sometimes way down after the crossover, well into the trend. That was bad timing right there. I shouldn't have done that, because now I've got to wait through that movement from the number 2 point to the number 3 point before it gets going this down direction again. And look how aggressively that came up. That could have actually been a nice up trade there. Yeah, that's the thing. You never know. These 1, 2, 3 tops and bottoms can take all shapes and sizes, so you never quite know if it's. Sometimes it'll make a little number 3 point like that, barely where you barely see it. Sometimes it'll make a great big one, and you can never really be too sure. So that's why it's better to err on the side of caution there. and not do what I did. To speed that up a little bit. It wants to try to touch that ADMA. Well, it's got some momentum down here, so wow, that really didn't give me much time to enter that. Look how it dragged that ADMA line down. It looked like we were entering the middle of the channel, but as it moved down, it brought that line down, so now it looks like it touched. So I entered a good spot, but it was a little bit delayed. Which is the reason for having 2-point targets. So let's just speed that up again to get the next P3 point. Here, I'll go to 20 here. Okay. That's what I like to see. I like to see it actually hit the line, and then that's an alert right there that you need to be looking for a P3 point. So I think on the next bar, if that close is anywhere near that ADMA line, that'll be where it's going to open. So I want the high of the next bar to be lower than this high. So if it opens down here, that shows me it moved at least some distance there to make that high lower. So whoop. If I said that right, lower high, I guess. That's dramatically lower than that number 3 point. It's one of those trade. It comes right to your limit order and doesn't execute it. But look at how bad that entry was. It was so far just because it started moving so quickly. I would like to get it right there as it opened, but when you're dealing with low volatility, even a point seems like a lot of slippage. See, I traded that momentum going into the target. And this is this is pretty close to how it actually was in the real trades. I wasn't that accurate either, because when you get lower volatility, it gets more and more difficult to enter at the exact spot you want. So again, we're looking for the next P3 point, so I'll just speed that up. See what I'm looking at here, it made a hook, and this would be considered an inside bar. So sometimes if it's trending steeply, you can take them even though they're not right on the ADMA. So yeah, that's a judgment call right there, but you see it has made a number 2 point, so we can assume maybe that that's a number 3 point. That would be what I've considered a phantom number 3 point. So let me try to take that if I can. See if it comes back a little bit. I'm a little bit riskier too with 2 point trades because I feel even if it doesn't hit my target, it should at least go 2 points. You know, the momentum alone will carry it. Because it's not that low of volatility to where I'm not going to get those hit, I think. Yeah, see how that there was no number 3 point there. It's just descending highs right here. And you get a 2 point, but you don't get a number 3 point. And I call those inside bars right here phantom number 3 points. And those are kind of tricky because they can go either way on you. Sometimes they don't follow through. So right here we're looking at kind of a congestion area. So yeah, let me continue that. I'm real hesitant on waiting. Normally for congestions I want to see it trade sideways till it hits that ADMA line again and gives me some positive. Right here that's number 2 point, and that's lower than that number 2 point. So do I trade that or am I trading that? That's what creates confusion there. And see, I see a number 3 point potential there, and so I'm hoping on the next bar that it will break below this 2 point here. So thankfully it went against me towards the ADMA line right off the bat, but if it trades back through it, I'll just, wow, it hit my hit my target before it even got there. That's a glitch in the software. So look how it bounced down, so you can already kind of tell what it's doing before it even makes the next bar, because it bounced down, bounced off the lower Bollinger Band, ricocheted, and is up right back up here. So that tells me the momentum's upward. So I want to be really hesitant on taking the next trade to the downside. Matter of fact, since we got the stochastics out here, look what it's doing here. It's breaking above the 20% line. I've got the 80%, 50%, and then the 20% line here, which indicates it's breaking out of the oversold area. So that's a trend change signal right there. You don't trade that yet, but it tells me I want to be looking for a number 3 point. So yeah, it broke above the previous resistance lines. The ADMA line is coming in towards the 14 simple moving average line, and I want to see it pull back down into a number 3 point for a 1, 2, 3 bottom, and I'll trade the upside if it trades back through the 80 MA line. See, I'm still expecting movement to the downside here. That's why I don't immediately go long, because I'm expecting that leg from the 2 point to the number 3 point, and the number 3 point should be a little bit higher than the number 1 point here for a 1, 2, 2, 3 bottom to the upside. So I've stopped looking for the P3 point to the downside because this 80 MA line is sloping inward, and we had an aggressive up move that broke above here. So that tells me everything's just like if you're in a car and you put on the brakes, you see the loss of momentum one direction and then heading the other, and that's all I'm really looking at there. So I see that line is lagging behind the where the price bar is, so that tells me it's already crossed over really, and I want to get on that first trade to the upside. Even though this would be the number 2 point, I'm getting it a little bit early, I guess. Sometimes these trend changes can be agonizingly slow. The stochastics actually are pretty good at looking back, because you can see that the breakout occurred right at this bar here. The breakout above the 20% line. And so that kind of foreshadowed after this number 3 point, or number 3 point right here was made, that confirmed that that's a legitimate break to the upside. So that's one way of using the stochastics as a first of all, an alert, but also a confirmation of what you're seeing on the formations. Make sure you're reading everything correctly. The more signals that you have confirming each other, usually the better it is. I like the fact that this Bollinger Band is bending upwards and this is bending outwards, which indicates increasing volatility. Now it's just flat right there, but I'm kind of playing it close to where my target is, because it's almost right on that Bollinger Band line. Sometimes you'll get a reversal before it hits the Bollinger Band if you're in a trading range, so you got to be careful about that. And we've got the gator mouth opening here. That tells me that could be an emerging uptrend here. So now, as the Bollinger Bands are widening, that tells me increasing volatility. They'll do that at the as a trend begins. They'll start to widen out as the trend is confirmed, the Bollinger Bands will start to parallel each other, and the ADMA line. They'll all be kind of running up in a uniform channel. For example, here this downtrend, you see how initially they widened out, and then this upper one comes down parallel with the bottom one as the trend is becomes a solid trend. But usually at the initiation of each trend, they'll widen out like that. So that's a good symbol there. Did I miss a trade here? I'm still looking for that number 3 point, the P3 point. I know it's boring watching actual speed, but at the same time, I don't want to miss a trade. I'm also keeping in mind here that we're kind of going opposite on the 5-minute chart. So I'm very cautious about this reversing on me here. Let's see if that's the same bar entry. See, I'm just noticing the momentum here. It's a young trend, so I'm trying to get that at least the first target, first move upward, if nothing else. And you can get away with a lot of sloppiness, at the initial part of the trend. You can often get away with buying or selling at the Bollinger Band as the trend starts. Don't try to do that, but you can get away with a lot of being a little bit sloppy as the trend starts. Yeah, we gotta see. This could be a big 1, 2, 3 point on the intermediate chart or 5-minute chart. That pop-up would get out of the way. Or we could be forming a 1, 2, 3 to the downside here on the intermediate chart. If you look at the overnight market, it's been in an uptrend all night until the opening here, and so it looks like it's resuming back into that previous trend, but I can't enter here until I get a number 3 P3 point. See, that's parallel. I want to see it at least come below that, I think. Let's just slow it down to be sure. Sometimes it looks like a number 2 point, but you don't know yet, because that could rise higher and still that would act like a number 2 point. Just because you're seeing that pattern, you're seeing that hook pattern, because these are two parallel instead of increasing. That might not give me a chance to get back in there. If that comes and breaks above that resistance here, that might be a good bet to go long, because we've got at least 2 points in an upsloping channel. Even though I don't like it because it didn't come back and hit that line, sometimes in a stronger trend you're not going to get that pullback all the way. So what I did is I broke above support here. I took the trade there. I don't mean support, I mean resistance. The resistance of that bar there, and the support would be the bottom. If you look at the up move here, and just visualize in your head, it's from this distance here, where I've got the cursor, to this distance here, and look at this up move to this number 2 point here. If you look at my the trading formula I gave for targets, the real world doesn't have all the targets equal to the last move up, but in the trading model, what you're looking at is variation from that norm. So let's say if this was the up move here from this number 3 low to here, and it's roughly equal to this next move up. Now, let's say we get a move up that's not quite as high, then that's a good sign you're going to get some. You might get a trend change, or you might get a little congestion area or trading range. That's what would be considered a target failure. Since I'm using 2 point targets, though, I can even hit my 2 point target and still not hit the model target, the trade model target, which is equal to the last move up. So the trade model says this next target should be somewhere up here, because there's allowing for symmetry in the market. But if you get an imbalance and it misses that target, that's a good sign that your upward momentum is decreasing, and you're looking at a potential trend change. So that's how to be on alert for that. And also, you're going to get the Bollinger Band starting to curve over. You're going to get the EMA line starting to curve inward. And so I'm looking at that number 2 point here as opposed to the last one, and I'm not seeing it hit the target here. So that tells me be cautious about entering that trade here. So that's why I didn't enter that one, even though if I had entered that, it would have made a 2 point target there. See, if I had entered at that open, that would have hit my 2 point target. But when you start seeing they're not reaching the there's little up moves, and the pullback is over 50% of that last up move. That's all signs of reversal, and that the trend is slowing down. That's a big sign of reversal right there, when you get the breakthrough of the support and you're bending in the ADMA line. That's kind of obvious right there, as you can see. Now, it could be making an intermediate low and then start resuming the trend there. But you can trade those intermediate pullbacks on the minor swings, which is what we're set up to do with 2-point target. So I don't have a problem if that sets me up for a down trade. I'll take that. So remember, what we're looking for here. We're looking for the if this is a 1, 2, 3 top, that would be the number 1 point. This would be the number 2 point, and so we're looking for a pullback to the number 3 point before I can go short. Or if this ADMA line crosses over, I want the entry as close as possible to the ADMA line, or trade through it after the crossover is made. And this is where you have to, do you risk entering here and having it go back against you, or miss the trade? So I'll just err on the side of caution because they don't have too much far there. That got the trade. So that's a judgment call that you're trying to make at that in that moment as it crosses over. Since we don't have our stop loss orders are set so far back, I'm not really too worried if it came back against me a little bit. So I just went for it there. See how sometimes the 1, 2, 3s aren't as pronounced as other ones, like that first one. And on the 5-minute chart, you see it's making a gigantic one. So they come on all sizes. So again, we're just looking for that, because I see at this point, if I'm trading the markets on Monday, I'm seeing at this point we're not trending on the intermediate chart. We're in one big trading range. And generally, a trading range is mature when it makes a big M shape or a big W shape, and then it's ripe for a breakout of the trading range. And that's kind of the way the markets move. They just move from trading range to trading range, and in between are the trends, the trend lines. I know it seems like a waste of opportunity to let all this movement go by, but if you want to do it safely, you want to wait for that number 3 point or P3 point to form first. And I'm just calling them from now on. I'm just calling them P3 points instead of number 3 points to distinguish it from the 1, 2, 3 top and bottoms, which have reverse numbering from the hooks. I'm going to speed that up a little bit, even if I miss a trade here. Okay. So we don't know if that's number 3 point yet, so it's the same procedure. And this is always the decision area. Some people just, some traders just, hit it right as it gets on that line, even if it's moving against their position. But I like to see momentum first, going into the trend direction, because you never know if that's a bounce off that lower Bollinger Band and if it's reversing. In this case, it's probably not, because we've got a good downtrend here, and we've got the Bollinger Band expanding outward. So that's a sign of a trend. And you know it's going to trend if it is in a downtrend. This is previous support over here on the 5-minute chart. So you've got a ways to go down to this point. So that's a pretty good bet right there. If you can get in somewhere in this vicinity. That's even, and I'd like to see it come. You know what? I'll be short if it breaks below that support area here on the next move down. Because just eyeballing it, that's roughly 25% of this leg from here to here. If we took 25% of that and added it to this, or subtracted it from that point, that's going to put me right at that breakout there, I think, of that low. Hopefully it wasn't the same bar entry here. I missed most of the same bar. If, for example, that made a number 3 and then went down, I missed most of those anyway. So it's just best to wait for the next bar. And my reaction was a little bit delayed on that one. So, but yeah, see what I'm trying to do is get that momentum. That's always a safer bet than having to wait through adverse movement there. So I'll do the same thing again. Look for a number, a P3 point. I'm not really feeling it yet. Okay, that looks promising right there. See how this bar barely touches that 80 MA, but it is above the high here. So this could be the entry right here, or it could be the next bar. And then I'd look for it to break below this low here and give me at least 2 points out of that. So you are always playing the odds when you do this, but the odds are going to work out in your favor because you've got all this stuff going in your favor. That you've got the trend, you've got the all these indicators right here. That's kind of looking like it wants to break above, but we might get one more trade out of that to the support point over here. So I'm watching all these signals. So let's see how that works out. I'm not doing this by memory, by the way. I'm doing this the same thought process I used in the actual trading. I'm just going by the what the signals are. See how these are upsloping here? I want to see a break below that. I want to see a break of that really tiny minor uptrend of lows here. If we get a break below that, that's a sign. That's another sign of breaking through support. You break through a kind of a micro trend line there. I want to see that come down. Give me some momentum, It could. Sometimes it'll just continue upward like a big won't even make a number 3 point. But that's a risk. Sometimes if you see that, you'd have to reverse. But I'll just go for it there with the assumption that it's going to try to make a number 3 point at least. If this were a 1, 2, 3 low, I mean. If this is a number 3 in a hook formation, then I would expect it to come down some distance towards the target. If this is a 1, 2, 3 bottom, I would expect it to be going from the 2 point to the 3 point. So I know I've got some distance. Okay. I know I've got some distance between that, between the Bollinger Band low. So that was a hook, because it's not a 1, 2, 3 formation. This number 3 point would have to be higher than that number 1 point. So that was a hook, but it's looking it's like it's shallowing out like a spoon. That's another sign, if you start getting these, and it's not quite the distance here from this P3 point to this target is not the same as this P3 point to this target. You can see how it's failing to hit the, if there's symmetry, it's not symmetrical with the previous move. So that tells me the momentum's decreasing, and we could be looking at a reversal there. So that's the thought process I would go through in a live trade. I'm seeing the same thing. So the market's really telling me kind of what it's doing as it's moving along here. Now it's looking like it. Is almost even with that, the distance from the last P3 to the target here, the previous target. It's almost that distance, but it's still falling short, and it's hitting support right here. And what you can see, we're in a large trading range. Anytime you hit support, it can break through support, but the first reaction you would expect would be a bounce. And if it's going to break through, it's going to probably come through on the second attempt. As I was saying, the trading ranges are mature when they hit a big W or big M. So I believe this one was true to that rule, that if you're looking at the 5-minute chart, it came back up and formed a big W before breaking out of this range, if I remember correctly. Or it can do a big M formation. And another sign also is it 3 or 4 swings down? If it's that third or fourth swing down is often a trend reversal. And not always, but sometimes, if it's really trending, if it's trending on the intermediate chart in a really steep trend, it can make swings all day long in the trend direction. But if it's in a trading range, and we've got trends in a larger trading range, within a larger trading range, a good rule of thumb is 3 or 4, and it's ripe for reversal. So same procedure. Look at that pullback. We're pulling back to the last pivot point. You break above that, and that's a valid trend reversal signal right there. If it was going to continue, I'd normally look for a pullback of maybe 30% of the previous down move, and then move back into the same direction. So I want it to at least show me that the trend has crossed over first. That's a definite crossover, but for me, that's too far away from that 80 EMA line. I want to see it come back, and I want to see the crossover hold. I don't want to see it come back down. And so, it'll form some kind of lower point here, and then move back up through it. That's where you want to enter the new trend direction. Half the time, all I'm trying to do is get the timing right, so I don't have to wait through adverse movement against me here. Another thing I'm noting is these are really sharply, the Bollinger Band lines are sharply narrowing, so you got to project that your target is probably going to be where that, if we enter the trade on the next bar here, we're still looking about that narrow. So plan on entering much lower if I'm going to hit that target. I might not enter that trade just because the Bollinger Bands are narrowing like that. So yeah, it's going to have to come back to give me room. So I'm going to risk that trade, knowing those risks right there. Look, if I enter that trade, I'm right up against that target, but right up against that Bollinger Band, I mean. So that could be a failure right there. But look where we are in terms of just doing what we've done so far. We're up $820, and that's only an hour, a little over an hour of trading. So at this point, I could probably take a few risks. So I'll just see if I can hit that target, and then I'll close it up, wrap it up here. But at least we got to see two trend changes and how to manage those. And some of the things I'm looking for that are precursors or warning signs that the trend range is coming, trend change is coming. If I could talk, that would make sense. That was such a bad entry for such low volatility that I might not even hit that target. So I'm just gonna exit if I get a positive, if I get a little profit here. Well, I like that it's moving. The Bollinger Bands are expanding. So here, let's just let's speed that up a little. I couldn't take the suspense anymore. Okay, I'll let that be the end of this trading period right here. I hope I haven't gone an hour, but that would have been pretty boring if it was an hour. But hey, if you can, if you're making $870 in an hour, it's never too boring. So I'll see you on the next one.